Welcome to the world of trading, where it often feels like a few players know the next move before it even happens. This is the world of smart money. But what is it, and how can you leverage it? First, let's define smart money. It's the capital controlled by institutional investors, hedge funds, central banks, and other financial professionals. These aren't your average retail traders. They operate on a massive scale, with access to advanced research and tools. Their deep pockets and expertise give them the power to influence market trends. Think of them as the whales of the financial ocean. So, how can you, the retail investor, spot these whales? It's about looking for their footprints. A primary indicator is a sudden, massive spike in trading volume without a clear news catalyst. This often signals a large institution taking a position. Another method is analyzing institutional filings and reports, which disclose the positions of major funds. These clues help you understand where the big players are placing their bets. Now, how do you trade with this knowledge? It's not about blindly copying them, it's about understanding the market structure they create. Smart money concepts focus on identifying key price levels. Look for order blocks, which are specific candle patterns where institutions have placed significant orders. Pay attention to liquidity grabs, where price moves to an area to trigger stop losses before reversing. And watch for fair value gaps, or imbalances in the market, which price often returns to fill. By learning to identify these patterns, you can anticipate potential market moves and make more informed trading decisions. Understanding smart money is about shifting your perspective, from chasing the market to anticipating its direction based on the actions of its most powerful participants. It's a complex but rewarding approach to trading,